Hello traders, you are welcome back to the Forex Geek channel, and I especially welcome you to today's video. Now we're going to be talking about swing trading on gold. In this particular video, gold is known for its big price swings, and swing trading gold can be a great way to capture those moves, right? So in this video, we're just diving into a highly effective swing trading strategy for gold that allows you to profit from medium-term price swings. All right, stick with me as we break down everything you need to know to implement this strategy in your trading today. Okay, swing trading is a strategy that aims to capture price movements over several days or weeks. All right, so unlike day trading, which focuses on short-term movements, swing trading seeks to profit from price swings as the market moves from one key price level to another. All right, in gold, yeah, in XAUUSD, gold can actually swing between support and resistance levels, and by identifying these key levels, you can position yourself to profit when the market makes a move. All right, swing trading allows you to be in a trade for several days, giving you the chance to capture larger price movements, without the need to constantly monitor the charts like a day trader. So now, choosing the right time frame is crucial for successful swing trading. For gold, we recommend using the following time frames. You can use 4-hour chart, you can use daily, you can use weekly. It depends on the length of, the length of time that you want to hold your trades for, right? The 4-hour chart is actually one of the most popular time frames for swing traders because it helps identify trends, support and resistance levels as well, right? Then for the daily chart, it gives you a broader view of the market's long-term movement, and it helps you see key support and resistance zones as well. All right, also helps you to see key support and resistance zones. All right, now for weekly charts, if you are looking for longer term swings, the weekly chart can help you spot more significant price movements and trends. Support and resistance levels are the foundation of any successful swing trading strategy. So these are the price levels where the market has, has historically reversed or consolidated. Meanwhile, the weekly chart can be very, very, pleasant to you if you are a fan of holding trades for months, right? If you're a fan of holding trades for months, then the weekly chart can be pleasant to you. Meanwhile, by using a combination of these time frames, you can actually be going from the weekly to the daily to the 4-hour, maybe doing some multi-time frame analysis and executing your trades on a smaller time frame, right? Basically, your main analysis can be done on the daily, for example, but maybe you can go to the weekly to get a more general overview of the prevailing trend. Like in this case, we can see that gold has been on a, on a steady, ascent since 2023. It has been on a steady ascent. So if you're a long-term trader, a long-term gold trader, you can just focus only on buy opportunities, right? You have gotten the general overview, and then you can come to the daily and then look for, setups, good setups for buy trades. You can just look for good setups for buy trades. Then you can execute your trades maybe on the 4-hour time frame. You can get your precise entry points on the 4-hour time frame. If you're a swing trader, right, you can actually even go to smaller time frames to get even more precise entries depending on how long you want to hold your trades for, right? Okay, so it's important to know that the price levels that you identify on the chart, all these important support and resistance zones, be it trend lines, dynamic zones or static zones, they are important zones that where the market has historically reversed or consolidated, and they provide a roadmap for where price may react in the future. All right, by using a combination of these time frames, you can identify the optimal points for entering and exiting your trades. Okay, now when we talk about support levels, there are areas where price has previously bounced upwards, like what we can see happen here. That when the price reaches a support level, it is likely to reverse upwards. Okay. Now, when it comes to resistance, there are levels, resistance levels. There are areas where price has historically reversed downwards, right? Areas where price gets rejected and moves downwards. Okay, so when the price reaches a resistance level, it's likely to reverse downwards. For to trade gold, to trade gold swing trades, you would want to identify these key levels and set alerts when price approaches them. By doing so, you can position yourself for potential trades when the market makes a move off these zones. All right. To confirm that a swing trade setup is valid, we use a combination of tools and indicators. Now, the first indicator we're going to be using is the moving average, but because it is swing trading, we're going to be using the higher periods, EMAs. So we're going to be using specifically the 50 and 200 EMAs. All right, the 50 EMAs and the 200 EMAs are what we're going to be using. All right. Okay, so they are excellent for identifying trends. A crossover between these two averages can indicate a potential swing trade entry. For example, you can see when this bullish crossover happened around here, it was a good buying opportunity. It was a good opportunity to enter a trade, a buy trade. Now, another important indicator we are going to be using is the relative strength index. All right, the RSI. It helps you determine whether the market is overbought or oversold. When RSI is above 70, gold is considered overbought, and when it is below 30, it's considered oversold. All right, so basically, when you have a buy signal from the moving average crossovers and you have the RSI coming out from the oversold territory, going upwards, it's a sign to enter a buy. And then basically, you should also get a bullish candlestick pattern for confirmation. For example, you can see these three white soldiers. Look at this series of green candles that happened here. This was a bullish candlestick pattern confirming the buy move. A bullish crossover occurred here. The RSI was above the 50 level. This was where the RSI got close to the oversold, right, and came up. And here it was above the 50 level, showing bullish momentum. And here we got these three white soldiers. This would have been a good place to enter a buy. Set stop loss below the recent swing low, and then you can target resistance zones, key resistance zones for your take profit. Okay, so it's important to get your confirmations. Remember, the moving average crossovers, the RSI levels, overbought for a buy, oversold coming up for a buy, overbought coming down for a sell, and then you look out for candlestick patterns to validate that signal. Okay, so the entries are very easy and the exits are very easy as well. So this is for a buy setup. The sell setup is just the opposite. All right, for the sell setup, if price is perhaps around a key zone, you can see that even around here, price was getting rejected from a key support level. So this was another additional confirmation. But for a sell, price should be rejected from a key resistance. Here it was key support. Price got rejected from a key support. That's for a buy. For a sell, price is going to get rejected from a key resistance, and then you watch out for a bearish crossover from the moving averages, and then the RSI. Make sure that the RSI has come down from the overbought already. That happened here, but at this point it was below 50 level, showing strong bearish momentum. So this was a good place to look for a precise sell opportunity. And guess what? We had sell confirmations with candlesticks. Look at the series of red candlesticks that occurred here. So you could have just looked for a good sell opportunity, perhaps enter after this particular gravestone doji formed. After that gravestone doji, you can enter your sell, stop loss above the recent swing high, and then your take profit can be around the next key support zone. So it's very straightforward. Ensure you have a good risk to reward ratios, okay, for your trades. Risk management is very essential in swing trading to protect your capital. All right, so to manage your risk, make sure you always use stop losses to limit your losses if the market goes against your trade. Make sure you risk only between 1 to 2% of your account per trade maximum. This ensures that a losing trade will not drastically affect your balance. And then make sure you keep a favorable risk to reward ratio. Just aim for risk to reward ratio of 1:2. For example, you can see this is 1:2.79. For example, I think we have a buy trade somewhere. Yeah, this one, you can see this about 1:2. So let your minimum risk to reward ratio should be 1:2. So for every $1 you risk, you should be aiming to make $2 or more. All right. So effective risk management ensures that even if a trade doesn't go your way, even if a trade does not go your way, it will not ruin your account. Okay. So this gold swing trading strategy is all about patience and precision. By using key support and resistance levels, confirming your setups with indicators, and managing your risk, you can trade gold with confidence and consistency.